and welcome to Weekly Insights with John Plassard. While everyone is focused on monetary policy decisions, the most important event of the next few days may be the US midterms elections. The midterms elections are scheduled in the US on Tuesday, 8 November, to be precise. After the presidential election of November 2020 and Joe Biden's victory over Donald Trump, Americans will go to the poll in the middle of the presidential term. In addition to a multitude of local elections, there will also be contests to renew the House of Representatives and more than a third of the Senate. Midterms election years are usually volatile for stocks as Republicans and Democrats vie for control of Congress, especially under new presidents. The incumbent presidential party typically loses seats in the House of Representatives, according to the Stock Traders Almanac. Given the very narrow margins Democrats have in the House and Senate, they could easily lose control of Congress in the midterms elections. The results of the midterms election can have a substantial impact on the future decision of the US government. In any case, there are three possible scenarios. One, the Republicans regain control of the House and Senate. If this happens, there is likely to be legislative gridlock and more limited range of fiscal policies. In this scenario, President Biden could issue some executive orders and take other action not requiring congressional approval. Second, Republicans win either the House or the Senate, but not both. In such a scenario, decisions will likely focus on policies with limited bipartisan agreement, as we have seen with infrastructure spending. More importantly, if the Republicans take control of the U.S. Senate, that will reduce the chance that President Biden will get approval for appointments that require Senate confirmation. And third scenario, the Democrats retain control of both houses. This outcome would be a surprise and would shift attention back to President Biden's policy agenda, including the comprehensive Build Back Better legislative package. The package includes measures expanding social services, clean energy investment and subsidies, raising or eliminating the cap on state and local tax deduction, and raising corporate and personal taxes. Finally, historically, the S&P 500 has outperformed the market in the 12 months following a midterm election with an average return of 16.3%. This is particularly true for the 1 month and 3 month periods following the midterms, which have historically outperformed years without midterms. Thank you very much. Have a great week. Stay safe and keep on winning.